What's going on? I'm going to break down the hottest trend to give you the best edge when it comes to staying afloat and succeeding in real estate in 2025. Breaking down all things interest rates, the possibility to leverage your loan, what's called appreciation arbitrage, and so much more. My good friend Zach Schaphorst, he's been with us for about 5 years, working together as my lender. We've done millions of dollars together in the past years. My team's at $1.5 billion, and Zach has helped us a lot get to that point. So you want to save more money or make more money, then Zach is your guy. He can help you so much in this call. I'm super honored to have you here.
Yeah, thank you. I appreciate you inviting me on. It's a great show that you've got put together.
Thank you. Happy to have you as part of the Elite Edge podcast, where the best of the best become legendary while we're here. And so as you don't know who Zach is, you want a quick introduction about yourself real fast for everybody?
Sure. So I've been investing in real estate for about 9 years now. I started out house hacking, which is where you're living in the property, renting out rooms to other, at the time it was friends, and then did that a couple more times, did a fix and flip. And then after flipping house in San Antonio, decided to get my mortgage license because I'd gone through the mortgage process a few times for both regular type conventional FHA loans and also hard money loan. And I'd seen some good examples of lenders and some not so good. And I felt like I could do a good job, emulate the good and not the bad. And so that's kind of what got me into the mortgage business, and been doing it 3.5 years, and about to be working for my third company, Summit Financial, or Barrett Financial, a team here in Austin that I've known the team lead for a while, and so I'm really excited for that opportunity.
I love that. Yeah, I think again, you're quite the legend when it comes to helping people get the homes either under contract, closed, and so forth. And we understand the nuances. If you guys don't know about Zach, his memory is insane. He can name off anything about any sports team in the past like 50 years. The matter what he knows about loan officing and those kind of things as well. And what makes you so passionate about helping homeowners and investors get finance? I know you said before, like you saw a lot of bad lenders in the past and stuff like that. What makes you so passionate about helping more people get the best loans or best like strategies?
Yeah, I'd say the biggest thing is I've seen the impact myself. I've seen my properties appreciate, and especially for those trying to get into investing, looking to house hack, like I can speak. I remember going through the process the first time, and I told everyone involved, my realtor, my lender, this is what I was planning to do. And they all said, that's a great idea, but they didn't really have any insight themselves. So I like being able to have, personal insight, and I like being able to guide people in a way that I think is going to lead to their financial success ultimately. And like I said, I've seen some people do it, and especially now that I'm in the mortgage industry, I really see a lot of lenders do things that I feel like are not in the long-term best interest necessarily of the client. And so I really try and make it my purpose not to do that, and really just be a mortgage advisor, someone that educates and ultimately leaves it up to the person to make their decision, but try and give them my expertise and my experience as both a lender and an investor on what's going to be the best decision.
I love that. I know today we're going to break down, appreciation arbitrage. This is named for the Burr method. We're going to break down rates moving forward, and maybe even like what will happen with Trump being president for taxes and for interest rates and for capital gains, all those things. But before we get into like the pros and the best strategies, what are the biggest pitfalls you think people normally face or go through when trying to get approved for loans or buy more real estate and so forth? For those watching, stay to the end because this is going to be, the pitfalls. But we have solutions for you too coming up pretty soon.
Yeah, a big thing is just not taking on debt that is not helping you especially before you buy property and start getting into real estate investing, not having your kind of financial ducks in a row in terms of, just your credit score. There's a lot of misconceptions that you need perfect credit. You don't need perfect credit, but really, you want to be at least in the 600s. But the other thing is, like, even if you can qualify for this, massive car payment and have a flashy car, like, that's going to restrict your ability to buy a house. And I think the biggest thing, a lot of people will reach out to a realtor or a lender right before they're about to, I want to buy a house in a month or 2 months. And it's like, maybe if everything goes well, you can do that. But really, as soon as you have that kind of seed planted that maybe someday I'm going to want to buy a house, that's really when you want to reach out to your mortgage advisor, your real estate agent, because then they can kind of guide you through those kind of things that might impede you. Like, do I really want to take on this car payment or, take out a credit card? How could that affect my credit? The further in advance that you set things up, the better for being able to make sure that you can buy the amount that you want.
Yeah, I think it's super spot on. A lot of my clients have come to me. It's like, hey, I'm gonna buy a house next week. Like, well, but you're pre-approved? Not yet. Well, that's the first step in paying all cash.
Right.
Otherwise, yeah, maybe so we handle that as quickly as possible. Otherwise, for those watching, if you're trying to see homes and you're not already pre-approved by people like Zach, most homeowners won't take you seriously enough to even look at your offer, for one. And then two, if someone who else is pre-approved and makes the offer for the house, they're gonna get it over with because now you have all this lag time to get pre-approved quickly enough. Yeah. So that's a huge thing. And I guess, like, I know a lot of my clients are thinking all they have is conventional loans. Conventional loans, 20% down payment, maybe 25% down payments, and so forth. Maybe FHA loans is 3.5% down payment. What other loan structures have you seen that have been really helpful for your clients to use and people may not even know about?
Yeah, so I mean, there's always some kind of down payment assistance options out there. I try to kind of bucket them because they're always changing. It's, different government programs, different, temporary things. Your conventional FHA, VA, USDA, those have been around for decades. They're going to generally stay the same. But really what I like to recommend if you are looking for down payment assistance is a forgivable down payment assistance program where you get this money for the down payment and ideally it's immediately forgiven and you never have to pay that back. The other type that is not quite as good, but okay, is repayable, where you don't have to pay anything monthly, but after you go to sell or refinance, then you do have to pay the loan off. What I try to steer my clients away from, unless it's the only option that works for them, is the repayable down payment assistance, where you've got basically a second loan on the property. It'll lower your down payment net that you need, but you're paying more per month for it. But yeah, understanding those options and also just USDA, that's a program that is a government loan like FHA, like VA, but I feel like it doesn't get talked about as much because it is property specific. You have to be looking to buy a home in a designated rural area, but they are, like here in Austin, where we both live, there are areas that are USDA approved, and you can buy those with 0% down. Interest rates are great for those loans. So that's a big one that I think doesn't get enough talk compared to the conventional FHA loans.
I love it. Yeah. And then the myth is now unmythed. You can definitely buy a home with no money down. More or less, you have earnest money and closing costs. Right. Even then, though, sell concessions, you can buy that as well from almost no money down. So it is a possibility. Like the gurus tell you that it's a possibility, but it's really vague. But from a lender and also an agent myself, it is possible. Just take a little more creativity to make that happen. And for those of you watching right now getting value from this stuff, make sure you like, subscribe, tag your friends, follow Zach as well. We have way more to come. Unpack the biggest pros and strategies for you guys to really turn we have right now in terms of wealth and income to the next level in 2025. Give you the edge that you need. And before we get started on that, what do you think about people who buy homes without a loan? Do you think it's a good time to buy in cash? What are your thought process on that?
Yeah, I mean, if you have the ability to buy cash, then I think today is a very good time from a negotiating standpoint to be able to do that. And you can, yeah, I think you're always able to get, of course, sellers are, if they can get a cash offer, you can close in a week versus 3 weeks to a month with financing. That's always appealing, but especially now, I think with interest rates being higher than they were a few years ago, I think it's a great time to buy cash if you have the ability. And one thing I will sometimes suggest for certain clients where like you could buy with cash, but it's going to be like almost all of the available cash funds you have, is you can always buy with make a cash offer and then refinance right after that to pull out some of that cash. And then, that cash offer is obviously going to be more likely to be accepted by the seller. They're going to want that certainty and the ability to close quicker. But then you also, are able to tap into that equity right away. There's no delay. That's called what's called delayed financing. And that allows you to pull out the money. So you're not using all of your available cash funds to buy the house.
I'm so happy you said that because that is a huge thing to me. Leverage is everything in real estate because that's what it's all about. I can buy a house that's worth $1 million for $200K and I control that property. That's leverage. And it's an easy way to make more wealth quicker. It goes to our next point, which is the appreciation arbitrage, which is we coined it over here. Elite Real Estate Group. Some know that the Brewer methods or just leveraging equity. And what are your thoughts on people leveraging the equity that we have to buy more properties, fix their own house? Think it's a good strategy, a bad strategy? What do they do or not do it?
Yeah, I think it, like anything in real estate, really. Someone just asked about seller financing, which I can get to if we have time. But it's a tool, and it can be a great thing if you know what you really want. I think the biggest thing to know about a HELOC specifically, and the reason HELOCs, I think right now are generally a good strategy, is because it does not affect your current mortgage rate at all. So for someone that is in a 2% interest rate or 3% interest rate that doesn't want to mess with that but has equity, you can take out a HELOC for up to 80% of the home's value and use that to buy more property. So that can be a great tool to not mess with that initial interest rate. And the good thing about a HELOC versus like a cash out refinance, for example, is it's more like a credit card. You can pay it down, you can use it as needed. It's not like here's a lump of cash and then it's done. And the other thing that is nice about it is as you pay it down, the monthly payment on it changes. So it's not like a mortgage where this is your fixed monthly payment. It stays that way. The HELOC, it can move up and down depending on how you use it. The one drawback and the thing that you want to understand about HELOCs is it is typically fixed for some period of time, the interest rate, but then it usually will become variable. So you have to understand that the rate could change, could go up or down depending on the market. So again, it's a tool like anything else in real estate, but it can be a really effective tool, I think, especially if you have a really good interest rate and you don't want to mess with that, but you do have a good amount of equity in your primary residence.
Yeah, I think it's like one of the easiest ways to like turn your house into a bank almost.
Yeah.
Like normally you gotta get pre-approved to get a new house and like that, the whole process. This way, like your home is doing all the financing for you. And what's cool is, in Austin at least, your home should double in value every 7 to 10 years. So if I bought a home a decade ago for $500,000, now, depending on where you're living at, it's worth $1 million. That means you have probably 6 to 700K in equity. You've been paying down the rent as well the whole time. And I don't think you should ever go super extreme leverage. I'm not Dave Ramsey. I don't think you have no leverage.
Right.
Like, kind of middle ground,
Medium.
Yeah, happy medium. Like, okay, I have 700K in equity. Let's put up 200K, buy another house for $1 million, and then boom, your net worth is increased so much. And this market, like Zach was saying, is the buyer's market. So I can buy a home or cash way below market value. I just stayed with one of my clients actually like a month ago, $362,000 buying a house. It was worth 1.2, bought for 850. So they bought a home and made equity instantly. Right. And if they wanted to, they could pull out the equity and buy more houses with it. So what kind of things the strategy you have in place? And then speaking of strategy, like since someone already asked Lily the question, what are your thoughts about seller financing?
Yeah, so seller financing, seller finance is something that doesn't really, it's kind of a, I don't know, taboo topic in the mortgage industry because essentially it's cutting out the mortgage lender. Mm-hmm. But the nice thing about starting as a real estate investor first is that I was introduced to seller financing and became familiar with it before I became a licensed loan officer. The biggest thing, again, I'll say the same thing. It is a tool. Now, I will say it is a much more, like it's not going to be available for every property. That's the biggest thing is typically, so let me first define it. So seller financing, also known as owner financing, is where the current owner of the property acts as the bank and they are selling, quote unquote, selling the property in exchange for the new owner paying them a monthly payment. Now, the current homeowner, the person who is selling the property, still, if they have a mortgage, is still paying on that mortgage. So that's why most sellers do not want to do seller financing because they want their big lump sum of money and to move on to the next thing. But especially if a property is, if it's a hard property to sell for whatever reason, or right now being a buyer's market, if there's just less buyers out there, this is commonly a strategy for real estate investors, people that either can't qualify with traditional financing, or maybe they just don't want to go through the hassle, and you can negotiate one-to-one with this homeowner versus, relying on the market, rates that are available where you're working with a lender. So seller financing, it can be pitched sometimes as like this magic bullet. And that's where I kind of, push back, is because it's not going to be available for every property. Now, if you call 100 people listing their house and ask, are you open to seller financing? Maybe you'll get one or two to say yes, especially if they've been on the market for a while. But most are not going to accept it. So, and of course, the terms that you negotiate could be good or bad, depending on your negotiating ability or your realtors, if you're working with an agent, and the seller. So I'd say seller financing, if used correctly, I guess, can be a really effective way to acquire property at a discount if you know what you're doing. But I would not say it is like this silver bullet that it can be portrayed as like this is the end all be all to acquire real estate. And I would definitely suggest, like, don't because I think there are some people out there that hold off on buying with like a conventional or an FHA loan because they're looking for this, unicorn type of deal with seller financing or subject to. And I would strongly recommend not doing that. Like, I would recommend getting into your first, at least looking into finance, reaching out to a mortgage lender, a real estate agent, seeing what you qualify for with the more traditional means, and then, starting with that. And then if you want to, get more into the more kind of off market seller financing type of stuff after, then, by all means. But I think a lot of people end up just not getting into real estate at all because they can't find this magical, seller financed deal with 0% down and a 3% interest rate. And so they just give up. And that's where I think it can be a negative.
Yeah, I totally spot on. And I think a lot of people, especially the gurus, are like, this is the one all be all. If you do this, you make $1 million by tomorrow. Just hop in and do this strategy. And Zach was saying, you can tell he is a true professional because there is no magic strategy.
Yeah.
And real estate is typical. Every single day, month, and year, it's going to change and do things all the time. And Melanie said, gurus suck. We hate them a lot. And I think that we want to give you unfiltered, raw advice, give you the edge that you need to have massive success without any fluff. Which is why having people like Zach and I with fiduciaries, all best interest is your best interest. Versus gurus trying to sell you a course and a program about sub-2, other strategies, or a 5K weekend.
Yep.
Me and Zach actually met that way.
Yep.
5-6 years ago. How we met at a 5K mastermind.
Yep.
The value there, but there's so many different strategies. In real estate, it's like being a builder. You have a lot of tools in your tool belt, which ones do you use? And more often than not, like Zach was saying, seller financing, getting someone to say 0% down payment is hard. It's like, why do I take 0% down payment when I'm going to do FHA loan for 3.5%?
Right.
And also be financed and not have to worry about anything going awry during the whole process. When it's super, super big. And kind of cool backtrack, that's the appreciation arbitrage. Right now, we have a client that Zach's helping currently get a HELOC to buy another property. And I think the biggest pro to doing that is, one, having equity in my mind in your house just to have it there, unless you're like super like close to retirement, is a waste of money. You have all this pent up leverage in your house that's not being used. And doing HELOC, if you're small about it, not buying like Ferraris and trips to Cabo, but like buying more assets, your assets make you more money. Here in Austin, it's like a 5 to 15% appreciation rate year per year. That's just appreciation, not including the buy down of the mortgage from the leaser, not including depreciation and so forth. You're going to have a much bigger return. This is why people are leveraging equity to buy a house. On that point, what can people use HELOC for? Just so they know the whole transparency behind that. What can HELOC be used for?
Yeah, I mean, HELOCs can be used for really anything. There's no restriction from the lender, like you have to use it for XYZ. Now, to Jordan's point, I would definitely recommend using it for, something productive and either, real estate, especially like right now in a buyer's market when you can get something for pennies on the dollar because you're in a favorable position. But also, if you have to repair your property, which is going to increase the value of it, that can be a good thing. But as far as what it can be used for, absolutely whatever you want.
Yeah, this is why it's so nice. Like you have that money, it's your bank. You can leverage it the way you want to. Again, be smart about it. I'm not a financial advisor. I'm a real estate agent, so I won't advise you what you should definitely do with your money. But I do think real estate homes double every 10 years. And right now, I'll segue to market trends. If the same thing that happened past 60 years happened next 60 years from now, the average price of a home is $1.6 million across America. 1.6. Right now in Austin, it's $575. So if you buy properties and you hold it for long term and you have a long-term investment mindset, you can never fail in money. One of my mentors, he's worth like $200 million and will probably be a billionaire in the next 5 years. And he's huge in real estate. He's like, here's the secret to real estate. You never sell it unless you have to. That's the secret. Like you hold it as long as you can, you're gonna be successful in it. And he said, I had a lot of properties when I was younger. I sold it. I had it still. I'll be worth another $50 to $100 million. Like, that's insane.
Yeah.
And this is why it's so powerful to understand how to do loan structures, how to do real estate, and why it really matters. So moving forward, Zach, what are you seeing like the trends going for rates, for the economy, and so forth in 2025?
Yeah. So there's a this chart, and I don't know if you want to show it, where a couple expert predictors are thinking rates are going to go down a little bit next year. Not a crazy amount for anyone who's thinking like, I'm going to wait till rates get to the threes before I buy. Probably not going to happen, but I definitely could see rates coming down a little bit. But it's all going to depend on inflation, jobs data, and it's going to be, the movement is going to be impacted by Trump's policies, because the market is constantly predicting what different things are going to lead to in terms of inflation or jobs. So I think the interesting thing is going to be, Trump has talked about a lot of things that are, stimulating to the economy, things like tax cuts, tariffs, big, corporate breaks to corporate companies, less regulation. All of those things are good for booming, making the economy boom, increasing GDP, making stock prices go up, but they tend to lead to inflation. And mortgage rates, the focus is, what is inflation in the future? That's what really drives mortgage rates more than anything else. So the other thing he's talked about, however, is cutting this government spending, and less jobs and less spending in general to bring down the overall deficit. That would be good for mortgage rates because it has the opposite effect. So I think it's going to be interesting to see the balance between those two sides, and which he does more of. And I think that's really going to be, at least initially in the year when he takes over office, what I'm going to be most focused on, and seeing which side wins, is the lower spending or the more stimulative type of policy.
Mm-hmm. Yeah. And as you all know, we don't have crystal balls.
Yeah.
This graph is great. It's great. We have no clue if it skyrockets, the code happens again. It's 3%. I think, like Zach was saying, 3% interest rates will probably not happen again for quite some time, if ever.
Right.
Like, the economy was in a really tough spot due to COVID, and it had to find a way to kind of offset that and give people hope again. It was so low for so long, and you have those rates, that's great. And if you don't have those rates, you can do seller financing, you can do assumable loans, you can do sub 2. The last one, not as keen on because it's quite risky for the sellers, but it works. If you can have a win-win and you trust the person, go for it. You can assume the loan and have a new one on top of that. But a lot of strategies. And do you think with Trump being such a big, bullish real estate investor himself, will it be more pros or more cons even for other investors now and the home buyers as a whole?
Yeah, I mean, I definitely could see him trying to pass legislation to, cut down on taxes for things like capital gains. There had been some talk about abolishing the 1031 exchange, which, for those that don't know, that's the ability to roll your gains on an investment property into another real estate investment or similar investment without paying any taxes. And I definitely don't think that's going to go away with Trump. But as far as, I think a lot of people have this misconception that the president can directly control interest rates. I do think his policies can impact interest rates to some degree, but there's not like a knob he or anyone, the Federal Reserve, can turn to just make interest rates get better. So I think his policy could be favorable to real estate investors in terms of taxes. And I could also see him passing legislation that makes it easier to build. That's one thing that it seemed like both parties were pretty in alignment on is that there's an affordability issue in real estate. And I think both parties agree that there needs to be more housing. Now, how they go about creating that housing is a little different. But I think in Trump's case, lowering the barrier to entry for builders, trying to cut some of the red tape, I think that's going to be something he's going to at least try to do.
Yeah. I think so too. Him being so big in real estate, it'd be mind blowing if he's not passing more laws that help him as well. Because like that's kind of who he is as a person. Love him, hate him. I'm not talking about politics in that regards. I'm about policies in the real estate industry. And speaking of taxes, one thing I love about Appreciation Arbitrage is the tax strategies that is involved in those. For those who don't know, Zach, you want to kind of shed light. Although taxes on HELOCs or refinances, like how does that work exactly?
No, there is no tax on the money that you make from doing a HELOC or cash out refinance, because the logic is you've already paid for the property. You're not, you're just tapping into the equity of what is yours. So yeah, there's no taxes on that. There's also, if you own the property as your primary residence, there's some pretty significant tax benefits to when you go to sell that property. If you live in a property with a spouse, you can make up to $500,000 tax-free. Anything above that, you are going to get taxed on. And that's if you've lived in the property 2 of the past 5 years. So even if you've moved out, a year ago, you can still get that benefit. And even if you have, always owned the property as an investment or for the past 4 or 5 years, you still have the benefit of the 1031 exchange I talked about earlier. So there's a ton of tax benefits. And then beyond that, there's just everything that you pay each month outside of, the money that you're paying yourself back, the principal is a tax write-off at the end of the year. So there's a ton of tax benefits as it stands right now for owning and buying, selling real estate. And I would think, if anything, there's only going to be more of those with Trump in office.
Yeah, spot on. So I agree with you 1,000%. And 2 things to add to that. One, you think about it, those watching, the reason why real estate is amazing is because of that fact there. You can avoid so many taxes, and you know it's going to grow year by year, at least in a decade for sure in most places. And that is a powerful compounding effect, because when George Washington and all these people back in the day made laws, they owned lots of real estate. Yeah. So, of course, it favored them. Like right now with Trump, it favors him. So, of course, it's those who own real estate are passing laws. That's why. I see so many gurus, as I'll pop up Melanie's thing again, so they really make a point about it, that they teach people, and you can add more context to this, that you own real estate. They say, buy some properties, and in 5 years from now, you'll be so rich in cash flow, you can retire, live on a yacht, do you want to. But the thing is, what I've learned from most of my clients who are buying tons of properties and doing $1.5 billion in transactions to my team, myself, that's not the case. You will get rich, but it's more like you get wealthy. Because $100, $1,000 per month won't change your life. Right. Unless you're like just starting off in your whole career, you're super young, and you're doing house hacking. So I did when I was like 19, and then so forth. But the value is that wealth you make behind it. That's how you get super wealthy in real estate, not the cash flow. But you want to add more to that now you own properties and so forth?
Yeah. I'd say one of the things that I've just experienced firsthand is you can kind of, if you own real estate, you can, and I think this is just owning businesses in general. It's kind of similar thing, depending on how things are going for you. If you're having a really good year and you're expecting you're going to have to pay a lot in taxes, you can kind of offset that a little bit by investing in the real estate, like doing more repairs, buying more real estate. And there's kind of a strategy where you can be more flexible if you have real estate, if you have business, because you can do the same thing with business, put more into advertising, which is a write-off. So I think, yeah, owning real estate, especially and as rentals, it's not going to, one property certainly is not going to make you, Jeff Bezos, but having more flexibility in kind of your taxes and your income situation will allow you to be more flexible, and it's a compounding thing. You buy, if you can buy a property a year, I've heard some real estate professionals really extol that, and I think it makes sense, especially if you can, cash flow. Then that really adds up once you get a real good portfolio. And again, once you have properties, you can kind of, move things around depending on how your income situation is to make it more palatable tax bill at the end of the year.
Yeah, exactly. There's people like Trump again. He paid $800, I think, in 2023 for taxes because he leveraged his equity and depreciation to make that happen for themselves.
Yeah.
Real estate is like the leading factor of having true wealth and avoiding taxes. I'm not really avoiding, but like taking away taxes for themselves.
Yeah.
And for those watching, make sure you like and subscribe and tag a friend to this video as well. I'm going to cut you off on that one. And of course, if you have any questions down below, ask us questions as well before we wrap up. But I have one for you, Zach. For those watching and they're just trying to get into real estate investing or trying to scale up quicker, what is the best strategy you have, you think, that people can be doing right now to kind of ramp up the portfolio or the life in 2025?
Yeah, I would say if you're just starting out, the biggest thing is just understanding what goes into buying a house, getting approved. And it's your credit, it's your debt to income ratio, and your assets, how much money you can put for a down payment. That's it. Like, anything past history of, there's a lot of misconceptions that go around, but it's really just those three things. So understanding that, and really, I would say, again, reaching out to a mortgage professional as soon as you have the thought that maybe you want to buy property, and figuring out, here's where I am right now. This is the type of property that I want to buy. This is my plan, and really creating a concrete plan so you have direction. You're not just kind of, going off of what some random person on TikTok says, or just kind of, directionless. If you're looking to scale your real estate portfolio, I would say, I would assume you have more of an understanding about what goes into getting approved. I would say at that point, still being in contact with your mortgage advisor is a good thing. I had a time where I had first heard about DSCR loans, which are a non-QM loan where basically you're qualifying based on the income of the property. You don't have to qualify based off your own. You don't have to have a job. You don't have to have any verifiable source of income other than the income the property is going to be producing. So you can use that to buy an investment property. The trade-off is the interest rates are higher than your traditional conventional loan. So I, at one point, reached out to a lender about a DSCR loan because I thought, I don't think I'm going to be able to qualify for a conventional loan because I've got all these other mortgages. And he was like, talking through my situation, you have a job. Yes, you have these mortgages, but you have income. Have you looked into getting a conventional investment property loan? And I hadn't. So I reached out to the lender that I had worked with in the past, and I could. And I probably saved like 2% or more on the interest rate because I did that. So still, you might feel like more once you've owned a few properties, but it's still good to stay in contact with your lender and let them know what your plan is, and so you can coordinate. And then definitely, I think, especially once you are more experienced, really leaning on your realtor like Jordan, who has access to off-market properties, who really has a great understanding of the market and where, the real deals are. Because one thing that I have heard from both gurus and also just people who have made a ton of money in real estate is the money is in the buy. Like that's where you really make your money. Like Jordan said, on buying a property worth 1.2 million for 850,000. I just had a client buy a townhouse worth 209 million or 209,000 for 125. So instantly 80 grand in equity. Like those are the kind of deals that are out there right now. And I think leaning on your real estate professional, just, once you have your ducks in a row where you can either qualify for a loan, or if you want to try and go for your seller financing, again, that's kind of an advanced strategy that I would recommend more once you've already got a little bit of a portfolio. But that's where your realtor can really help guide you and, allow you to access the best deals available on the market.
Yeah, I think that's really good advice. And I think having professionals in your corner is so important.
That would be the way to summarize.
Yeah.
Having your professionals and leaning on them is the way to go.
Especially like for fiduciaries like myself and Zach, we only make an income if you win. Unlike other businesses out there, I'm going to charge you up front for the service, and then you pay me, and then something happens to you, I got paid. Who cares? As an agent and a lender, like, I got to make sure you get the best deal possible. I'll make sure you're at least happy at the very least before we move forward. That way it's a win-win. It's vested interest. That is the best way to go super far in life, I think, is finding ways to have invested interest with other people who have similar goals as you. And on the point of, being smart about buying or selling, do you think this is a good time to buy? And for those who are out there saying, well, I'm going to wait, what are your thoughts on that?
I mean, the biggest thing right now, I think, is and again, kind of going back to what I just said, is like understanding where you are, reaching out to your loan officer, because a lot of people will see like general market interest rates and think, okay, that's what the interest rate is for me. And sometimes, depending on your credit, depending on how much you have to put down, sometimes you can get a lot lower of an interest rate, or you can do a buy down where it's lower for the first year. So really understanding what's actually out there for you is, I think, very important. If after that point you feel, okay, that I just can't swing that, that's fine. I'm much more okay with that than the people that are just like, I'm going to wait. I'm not going to reach out to anybody. I'll just wait for interest rates to fall. Because when that happens, when rates fall in a sizable way, like into the fives even, a lot of people are going to get back into the market, and it's going to be probably a similar market to 2021, 2020. So I think right now is a great time to buy if you can qualify, if you can get to a place where you're comfortable with your monthly payment, because you can negotiate really low sale price. You can negotiate seller credits. That's the thing that a lot of people don't understand. This is basically where the seller is giving you equity in the form of a credit that you can use to either get your closing costs paid for or get a lower interest rate, or sometimes both if you get enough seller credits. And that's one thing that is really prevalent right now in this type of market. And, once it gets to a point where interest rates are lower, that's not going to be as available. So I would say, again, reaching out to your professionals that you trust and understanding where you are. And, if you're in a place where you can be comfortable with your monthly payment, I think it's a great time to buy while it's still a buyer's market and you can negotiate a great deal.
Yep. 1,000%. And I know I promised Zach 20 to 30 minutes. We're at 45. I love talking to Zach about real estate and all things business. So, of course, I went over on time. The last question for you to kind of wrap this up. What is the number one piece of advice you would give to people looking at buying or selling? And or what's one thing you wish you would have said in this podcast so far to help change some lives?
I mean, I think it's just kind of going back to I guess a little bit of a different thing. You mentioned that real estate tends to double every 7 to 10 years. I would kind of piggyback on that and say your focus should be to buy a property and hold on to it for at least 7 to 10 years. Mm-hmm. Beyond the fact that it should appreciate substantially, that's also the point where you start to really see drops in your mortgage payment. The way the mortgages are structured is you're not paying off a ton of principal at first, but over time you're paying more. So the property that I've owned the longest for 9 years, that's the one where you're starting to see really significant chunks out of that payment. So that would be my suggestion, along with what I was saying earlier about being in a place where you're comfortable with your payment. Maybe I would add to that, being in a place where you're comfortable, where no matter what happens, you can continue to own that property for at least 7 to 10 years. If things, go awry with your job, you have a plan in place where maybe you're renting out rooms or, you have some kind of backup plan. But that is really, I truly believe, one of the biggest ways to gain wealth is buying and holding real estate. And specifically, I think that 7 to 10 year range is where it's almost impossible at that point for it not to be a good investment.
Yep. I love that 1,000%. And I think that goes to all things in life. It's like, you used to be a long-term thinker and everything. If you met your spouse, like, okay, let's see what happens in a week or two or a year from now. Like, that's a terrible marriage. It won't last. You have to think long-term on business, on real estate, on your diet, your fitness, everything. And that's how you have true success, wealth, and happiness, in my mind. And where can they find you at, Zach? How can they talk to you more?
Yeah, so feel free to follow me on Facebook, Zach Schaphorst. Instagram, I think it's at Zach Schaphorst. On my YouTube channel is Mortgages Demystified. And then on LinkedIn, Zach Schaphorst, I do a weekly newsletter on mortgage, movement, what I think is causing mortgage rates to go up or down, and what I think in the next upcoming week or months will affect mortgage rates. So if you're interested in that, definitely check me out on LinkedIn and subscribe to my newsletter.
Yep. Zach is the best. We have done millions and millions of dollars worth of real estate transactions together. He's my go-to expert and professional. You can probably already imagine he is world-class at what he does. And speaking of world-class, this is what world-class people come to become legendaries. The Elite Edge Podcast. Thanks for being here, Zach. I really appreciate your time. For those watching, next week, Monday and Fridays, 11 o'clock, we are live every single week, twice a week. Mondays is me giving a whiteboard presentation, all things entrepreneurship and real estate. And on Fridays, I bring the best of the best here to help you guys have more of an edge in your life every single day. Again, thanks for being here, Zach. See you all soon.
Yeah, thanks for having me.